Guys, wagwan, welcome back to the channel. In today's video we'll be continuing with foundation of forex trading. Foundation of forex trading is piled up with everything a beginner needs to know about the forex market before entering the market. So I told you guys I split it into three basic foundations. That's foundation 1, 2 and 3, and I posted the foundation 1 today, and now I put it a few hours ago, and now I'll be uploading foundation 2 soon. So let's just get into today's stuff. Before we continue, make sure you subscribe to this channel, turn on notification, engage in the posts, so the algorithm can recognize the channel and push the video to more audience. So now we'll just get into the topic for today, and I'll need to talk about this on my screen. Sorry, you will not have to be seeing my face for now. So what we have in our foundation 2 of forex trading is forex market hours, what spread means, pips and points, what lot means, what leverage means, what equity and margin means. So these are what I categorized as foundation 2 in the foundation of forex trading. So now, the forex market hours. These forex market hours are the hours where trading takes place, and the forex market is open 24 hours and 5 days a week. The three major sessions we have in forex market hours are the London session, the New York session, and the Asian session. While the Asian session is divided into two: Tokyo session and Sydney session. Tokyo starts the day, Sydney ends the day. So probably let me put the time. London session is the most liquid session. Sorry, I didn't include that. London session is the most liquid session. London session is most liquid session. It starts from around 8 a.m. in the morning. Let me put time. 8 a.m. in the morning to about 12 p.m. stroke 1 p.m. And the New York session is the most volatile session. So let me just write. So it is high volatility. It comes with high volatility with overlaps. And this starts from 12 p.m. stroke 1 p.m. and ends around 4 p.m. stroke 6 p.m. At 4 p.m. 4 p.m. volatility reduces at 4 p.m. or it even stops at 4 p.m. in some cases. Once it's around 3 p.m., 4 p.m., 5 p.m., the market is going to be less volatile. Then in the Asian session, the Tokyo session starts the day. It starts from about 1 a.m. So 5 a.m. to 8 a.m. Sydney is 6 p.m. to Sydney sessions ends at 1 a.m. It ends at 1 a.m. It ends at 1 a.m. So now we're going to what spread means. Spread in forex markets is the difference between bid and ask price of a given instrument. I should have included meaning of okay. It's the difference between bid and ask price of a given instrument. Every forex trade involves two currency, which we call currency pair. Yes, every forex trade involves two currency, which we call currency pair. For example, euro and the US dollar. So let me include that here. For example, let me put that here. Sorry. USD. Euro versus US dollar. At a given time, euro may be worth 1.14000 times the value of dollar, and you may believe the euro will rise against the dollar. So what do you do there? You buy at the asking price. That's what you basically do. You buy at the asking price, but the asking price won't be exactly 1.14000. It will be a little more, perhaps 1.14001, which is the price you will have to pay for that trade. That is 1 pip spread on Euro USD at that particular time. Yes, so this will be the 1 pip spread of Euro USD at that particular time. Meanwhile, the seller on the other end of the trade won't receive the full 1.1400 either. It will get a little less, as perhaps 1.13999. And here, when you calculate this, it gives us 0.0002, which is the spread. So this spread here is the difference between the bid and ask price, and in this instance it is 0.002, which is our spread here. So that's what the specialists keep for taking the risk and facilitating the trade. And I want you to note something. Spreads varies from one broker to the other depending on the type of pairs you trade. So to minimize the spread incurred from brokers, it's best to trade during most favorable hour when there are more market participants, and also avoid buying and selling low traded pairs. Yes, you should also avoid buying and selling of low traded pairs, because those ones are going to have much spread. Yes, those are going to have much spread. And what you should know is that the smaller the spread, the more liquid the currency. The smaller the spread, the more liquid the currency. That's what I marked there. The smaller the spread, the more liquid the currency. So our number 3 here is pips and points. Pips and points. Pip stands for point in percentage. Yes, point in percentage is a standard unit and a smallest amount by which a currency quote can change. If you don't know the meaning of currency quotes, probably still need to go to my last video and understand that. That's in foundation 1. More simply though, a pip is what we in the forex industry would consider a point for calculating profit and loss. A pip, okay, let me write down. A pip, a pip is what we in the forex industry will consider a point for calculating profit or loss. Sorry. A pip is what we in the forex industry would consider a point, mark a point for calculating profit or loss. A pip is what we in the forex industry will consider a point for calculating profit or loss. So this is what pips and points means. And how to know pip is that pip in the forex industry is just simply when we are trying to take a step. When we walk now, we humans, when we walk, each time we move our feet, we call it step. That same thing is applied in this case now, in this scenario, but it is called pip in the forex industry, not step. So each let me say it like this: each step price makes is what we call pip. Each step price takes from 5,163.42. If it goes to 5,163. Look at it. It has gone 1 pip from this is 1 pip, 2 pip, 3 pip. That's about 6 pips there about, and it moves like that. So from just what I wanted to check here is the last number before the decimal point. So from this is it, like from 5,140 to 143. That's 3 pips. That's 3 steps. That's 5 steps, 8 steps. Now it has gone about 11 steps. So that's how calculation of pip varies depending on, like, the calculation of pips on USDT is different from calculation of pips on gold, and in the major currency pairs, calculation of pips on other currency pairs compared to the JPY crossed pairs are different. JPY crossed pairs, any pair that is crossed with JPY, as USD JPY, whatever Euro JPY, the way their PIP is calculated is different. And let's move to the next one. What is a lot? In trading here, we have a standard lot. We have a standard size for lots, which are 100,000 units, and there are also mini lots of 10,000 and micro lots of 1,000. No, historically, currencies were traded in specific amounts, and they call it lots. Then they call it lots. Lot size directly impacts the risk you are taking in a trade. Let me include that here. Lot size directly impacts the risk you are taking in a trade. Lot size directly impacts the risk you are taking in a trade. And I drew this table for you guys. So it's not really clear. So this is the table. The lots here, you have the micro lots, mini lots, standard lots, and in size the micro lot is 0.01, in units it is 1,000 units, and the movement value of each type of lot are the same thing. Then we multiply them by the units. Then it gives us each amount we are making per pip, depending on the type of lot we use. If we used micro lot, that's 0.01, 0.02, 0.03, 0.04. So let's say we are using 0.01 now, and per pip we are making 0.10 cents. If we use 0.02 per pip, we are making 0.20 cents. That's the meaning of that. So that's just the calculation. But in mini lots, that's 0.1, 0.2, 0.3, 0.4, 0.5, 0.6, 0.10. So here, the movement value is multiplied by the units, which is 10,000. So per pip you are making $1, and if it is loss, you are losing $1. So if per pip you are making $1 on 0.1, and you use 0.2 per pip, you are going to make $2. Same applies to standard lot. It is 100,000 units. Movement value still remains the same. Multiply movement value by the units, and that's 100,000. So per pip you are making $10. It's 1.0, and if it is 2.0, that's two lots. There's one lot, but it's just 1.0. But in MT5 you just write one lot. In 2 lots you are making $20 per pip, either loss, profit or loss. So that's the amounts you are making. And to take advantage of relatively small moves in the exchange rates of currency, we need to trade large amounts in order to see significant profits or loss. In order to see significant profits or loss, and I repeat, to take advantage of relatively small moves in exchange rates of currency, we need to trade large amounts in order to see significant profit or loss. That's basically the meaning of lot sizing. So you need to know your lot sizing well, calculate your lot size before you enter a trade. And let's move to what we have next here. Next chapter, we have leverage. What is leverage? Leverage in Forex is the ratio. Oh, sorry, I did a mistake here. Sorry. It is the ratio of traders' capital or funds to the size of brokers' funds made available for trading. So yeah, now in other words, leverage is a kind of borrowed fund in order to scale up investment capital for potential returns. Let me put it that way. Leverage is a borrowed fund, it's a kind of borrowed fund in order to scale up investment capital for potential returns. For instance, a leverage of 1:500 means that the trader can trade a volume of as much as 500 times invested capital. So if you are investing, if you are depositing $10 and your leverage is 1:500, it means you can trade a volume of as much as 500 times your deposit, which is 500 times your deposit of $10. You can trade a volume of as much as 500 times your deposits, and that's about 5,000 times. So it's you trading a $10 account with a 1:500 leverage. It's just like you trading a $5,000 account. It means you can trade like someone who is trading a $5,000 account. And what you should know is that, as good as it sounds, it is also important too. Traders can lose their invested capital easily when trade goes against them using higher leverage. When you use a leverage that is too high, the same way it has an advantage is the same way it has disadvantage, and that disadvantage is what eats more than it's going to eat you hard than the advantage. And this is why some countries like USA protect their citizens by regulating their maximum allowed leverage. They regulate the amount of leverage they should use, at least maximum. This is the kind of leverage you should use for their brokers. So what we have here now, number six is equity and margin. What is equity? What is margin? Equity is the summation of your account balance with the floating profit or loss of your open position, into brackets open trade. The equity changes in this aspect here. The equity changes based on price fluctuation from your current open positions. And I wrote it down there. So you guys will understand more. Equity equals balance plus floating profit or loss. Equity equals balance plus floating profit or loss. And margin. So, well, okay, let me just say something on equity again. Recall that when you have no open position or trade, and so no floating profit or loss, then your account equity and balance are the same. Your account equity is different from your account balance when you have a open position. Your account balance might be $1,000, and you traded out $1,000. You entered a trade, and that trade is in profits of about 10k, and so your equity, the equity of your account is going to be 11k. That's $11,000 together, but your balance is still $1,000, but you are in a floating profit of $10,000. So altogether is $11,000. That's what we call equity. So if you don't have no open positions or trade, your equity is like it remains same with your balance, which is 1K. So now let's talk about margin. Margin is the amount of money put down as collateral for a running position or trade. For a running position or trade. For instance, now let's say you have a current account balance of $10,000 and you want to buy 1,000 euro against dollar. How much dollar is available to pay for that? To buy that 1,000 euro you want to buy. And let's assume that the euro versus USD rate is 1.1. Okay, let me just write it down here. Let's see. Current balance. Current balance is $10,000. So let me use the dollar. $10,000. And you want to buy $1,000 euro against USD. You want to buy 1,000 euro against USD. So here now we're talking about how much USD is available to buy that 1,000 euro. And let's assume that rate of euro USD rate of market price of euro USD is 1.4314. It means that each euro equals $1.4314. Yes, it means that. Okay, let me cancel this. That's the price, and it means that each euro €1 equals $1.4314. That's the meaning here. So to buy 1,000 euro, calculate it. Let's say 1.4314 times 1,000. Let me check it here. 1.1344 times 1,000. Okay, that gave us 1.4314. Equals 1.4314. 1.43, sorry, 431.4. So that's as the one. So that's it. Let's put it in form of dollar now. So to buy 1,000 euro, $1.4314 is to be paid to buy 1,000 euro. So if 1,000 euro buy position is taken. You buy 1,000 euro against USD. So from your 1,431.40 of your $10,000 account has to be locked in this position as a collateral, meaning they are going to minus, before this trade can take place, what they will have to do before this trade can take place is they are going to have to minus it from your account balance as collateral for the trade you want to take. I'm sorry. That is $10,000 minus 131 point 1,000 431.4. So your account balance is going to be remaining 8,568.6. That's going to be your embedding. So that amount is going to be minus from your account balance as collateral. So if that trade goes against you, you have lost that amount. So your account balance is going to be remaining 8,568.6. So when a volume is set to 0.01 lots, 1,000 units, and then you click on the buy button, $1,431.4 from your account will be paid as collateral to buy euro against USD. This locked money, which is 1,431.4 in this example, is what we call required margin. Because without that action cannot be completed. Without that required margin, you cannot buy. Yes. You cannot buy 1,000 euro against USD. So I've come to the end of this foundation 2. I hope you people really find it, I hope you really found it valuable and interesting. I hope you really found it helpful. I hope you learned something from here. So that's all you need here, is to put in the work. That's actually what everybody needs. Everybody needs to just put in the work, and everything's going to work out. Let's just continue being who we are. And before we go, market is going to open soon, and this is our trade. I didn't use notes because I just wanted to show this.
It's 9 o'clock.
So okay, it's 9 o'clock. Sorry for the alarm. It's 9 o'clock already. This trade, it took this trade in the channel last week, and it took a whopping profit of 1:13 risk reward. This was the first trade setup, but our stop loss was hit on this trade. Then found a good entry, bam, market straight to TP. So expecting this setup here, I'm expecting price to come and touch. You can go and watch my last video, one of the video I posted a top-down analysis on XAUUSD. So I did the analysis. You can go check it out. What we're expecting price to do here is come to this point, and sweeping this place as liquidity before pushing to the upside and taking our profit. This place is our resistance zone. So if there before, we cannot know our next move. So that's just basically what we're expecting here. That's basically what we're expecting. Oh, sorry. So we're just expecting price to come here. And going to the upside. Oh, sorry. Five. Good. That's basically what we are expecting from here. So just stay tuned. You can join the join the Telegram channel to take trades with us. Yeah, this is Foundation 1 video. You can join the Telegram channel to take trades with us. I drop trades here. Join the Telegram channel. We are currently up at 192 subscribers. Yeah. Yes, join us and grow with us. To just stay active. If the trade goes and probably breaks, I stop keep tapping. Somebody out of you, right? So if this price breaks, if it bounces back from this trend line and breaks above this higher high, then this whole setup is invalid. It's invalid. So I'll just look for a new entry and post it in the channel. And I have some PDF files for you guys to sorry, I need to connect this. I have some PDF file for you guys. I'm going to be dropping them in the channel. I dropped about two already. Sorry, I didn't connect it to the hotspot. Okay, I dropped about two already. I dropped two. Oh, network. Okay. I dropped capital preservation already and one other PDF like this. I dropped one other one in the. So just stay logged in, focus on the grind, and I also recommend Baby Peeps. You can learn from Baby Peeps. You can learn from my video, and very soon I'm going to be dropping Foundation 3. I'm going to be dropping how to trade the fundamental news. There's still a lot more package for you guys though, so before you go, make sure you subscribe to this YouTube channel. Make sure you subscribe to this YouTube channel. Engage in the post. Turn on your notification, so YouTube will recommend this channel to more people. Why is the light dim like this? So just do those things commonly, so YouTube will recommend this channel to other people. I just traded each pairs on Spreadix index. Spreadix index. I do trade Spreadix index. I hope you can see it there. Deposit about 500. Made one profit and one loss. I hope you can see it there. Made a profit and a loss. And we're still up a profit. So just stay tuned. One love.